Okay, all right. Good morning, everyone. Yeah, I told you I will do a teaching on how to get the low of the day or the high of the day, and here is a video. One of the reasons why it had delayed a little is because of number one, I always love to use recent markets. That's one. Then two plus chance. Okay. So, but here I will explain it to you with this. Now, let me reinstate that what you have learned is simple enough for you to make money in the market. Okay, on monthly, weekly, daily time frame, 4 hour, you look for where the liquidity is, you come down to lower time frame, you find it, then you aim for it. Okay, it's something that is very easy to understand. Now, to get in the low of the day or the high of the day, I want to use this Friday example. Friday as an example here. What we'll be using is the CBDR. CBDR means central bank's dealing range. Okay, CBDR is between 14 New York time to 20 New York time. Look at it here. This is 14 New York time. So you draw a vertical line. You put your time frame on 1 hour. You draw a vertical line. Put it on 14 New York time. Then you go to 20 New York time. This is the CBDR. CBDR means central bank's dealing range. For those of you that will just open your trading view, and your trading view will just misbehave. Take for instance, let me say GBP USD. Okay, let me just pick this. I expect it to load. Sorry, I'm using glue here, so that's why it's like that. When it loads, I'll come back to it. Now, the central bank's dealings range is 14 New York time to 20 New York time. Okay, transpose that to trading and MT4 or MT5. This is the timing. Okay, now this place in ash, this is the central bank's dealings range. The rule is that when the central bank dealings range is more than 40 pips, you don't use it for that day. When it's more than 40 pips, you don't use it for that day. But when it is below 40 pips, especially around 20 pips, that's a good day to use the central bank's dealings range. Okay, so this blue line, horizontal line, is the high of the CBDR, 1.2396. This one here is 1.23802. Now here is the thing. When you are using the CBDR, you use the bodies of the candle, ignore the wicks. Now if you go to a 1 hour time frame, for example, you see it's like I'm using the wick here. But if you use the 1 hour time frame, the CBDR is almost like around maybe 12 or something. So I determined to use the 15 minutes because it gives it a little bit of room. You understand? Even despite the fact it's still 16.1 pips, the central bank's dealings range. So determining the low of the day or the high of the day, what will mean is that you want to anticipate where the Judas swing will fall, because there will always be a Judas swing, except on days where, take for instance, on maybe days like Wednesday. All right, maybe days like Wednesday, the market maker weekly manipulation model, where Tuesday I already make the high or the low of the week, then Wednesday just open and continue. But most times, understanding it with the concept of PO3, most times it will retrace, like form a Judas swing before the remove. Okay, now the question will be, when I see my CBDR like this in this 1 hour time frame, for example, this is my CBDR and I'm expecting a Judas swing. Notice that this here. Yes, this is the Asian range. Okay, let me put a line there. This thing doesn't set. Okay. Yes, I have a way of being funny sometimes. Sometimes this thing can be tough, but that's the Asian range. I want to give it another label. I mean, change the color, but that's the Asia range. Okay. Now, the Asia range is already completed. The CBDR is already completed. You woke up around this time, or maybe you open your charts around this time. So you now anticipate that, okay, where would the low of the day form? Where would the low of the day form? If you look at this place, we have another block here. It's not a high probability other block because it does not have fair value gap to it, but we have another block there. Okay, we have another block there. So you can anticipate that, okay, maybe the market will drop to that other block before continuing. Okay. So what you will do is that you look for the standard deviation of the CBDR. Now the colors you see in what's this color now? This one is it light green, then we see green, then we see yellow here in this straight line. Those are the standard deviation of the CBDR. And what I mean by standard deviation, let me explain. Let me delete the Asian. Something is confusing me. And what I mean by standard deviation is that the same size, let me use it that way, of that box. Take for instance, if I take this one now, I put it here. Do you see? It's the same thing. So I actually measured it. Okay. So this is 1 CBDR. I measured for green, this 2 CBDR. This is 3 CBDR. Okay. When the market came to the 3rd CBDR and found rejection. Okay, I traded this with someone on the group here. We traded this, but we didn't. We entered around the 2nd CBDR. Reason is that ideally, on a normal day without news, high impact news or whatever, market is supposed to use either 1 or 2 CBDR. Okay, the 1st CBDR is close to the tip of the other block on the 1 hour, while the 3rd CBDR is already into the 50% of the other block. Okay, so that's why we took the trade here. What are we aiming for? If you look at it on the 1 hour, look at these highs. Let me delete this. Look at these highs. Does that not look clean to you? Look at the body here. Does that not look like an equal high? So there's a relatively equal high that I aimed for. So my last TP was 1.2395 because I know it might not get there. So I target 1.2395. We entered at 1.2360. So it was basically a 35 pips trade that we anticipated. Market later went there, but already took us out because immediately we got to the first 20 pips here on this candle. We moved stop loss to a little bit of profit. Do you understand? We moved stop loss to a little bit of profit. Then we got stopped out. It wasn't a bad day because we made 20 pips and we didn't record any loss. Okay, good. So this is how you anticipate the low of the day or the high of the day. So invariably you would have already have your bias that I expect the London, I expect the Judas swing to come towards, maybe it's a buy day. When it's a buy day, you expect the Judas swing to be a sell, and when it is a sell day, you expect the Judas swing to be a buy. Just calculate the CBDR like this. Look for the standard deviation. Normally it should be 1 or 2. On a high impact news day, it will use 4 CBDR. It will use 4. Normally it doesn't go beyond 4. Okay, it doesn't go beyond 4. On a normal day, if this thing had used 2 CBDR, okay, one of the CBDR you just add, let's say we entered at 2 CBDR. Let's say our entries around here, we use 1 CBDR here for our stop loss. Do you understand? So we entered here. As it gets to maybe this place, we can take the first partial. Do you understand? So you use the CBDR also to scale, because it is a logical position in the market. Okay, like I said, you can make money without knowing this. But all of these things, these are some of the things that I blend together sometimes and make you look like, oh, how are you seeing this? Oh, this is what you are seeing this. Okay, so this is how you anticipate the low or the high. When you anticipate, or this is how you measure, when you anticipate that, oh, the Judas swing is supposed to be down, then you can use your central bank's dealings range. Okay, central bank's dealings range to do that. So, and look at what happened during the New York time. Market came there to the third CBDR, then it rallies and hits the TP. Okay, I'm going to do weekly analysis, but on next week I'm still expecting a buy. Let's look at what we have next week. Let me look at the daily time frame. You see, let me delete the CBDR whatever, so that we can have a cleaner chart. Delete. This is the objective on Friday. It's been achieved, so there's no point. Look at it. This is like another clean high. I'm expecting the market to take it. The market should not reverse without taking this. That's what I'm expecting. It had already gone there once and created like an equal high, so there's a liquidity there. So it retraced significantly as if it want to drop. It dropped below this green candle, but it doesn't move higher. You understand? So it came back here again, dropped into 50% of the body of this candle, then rallies high. This one dropped more than 50%, then rallies high. On Monday, I'm expecting something like either it goes up and take it directly before retracing, or should come a little bit towards like the 50% of the whole of this candle before it attacked that high. So I'm still bullish on cable. Look at it. I'm expecting markets to enter into this yes, before we see a decline. Are we still going to see a decline? I believe so. I will do something on fundamentals soon. I believe so. We're still going to see a decline. Do you get that? So I want market to enter into this place. So but I'm going to follow it little by little. This is the first objective. If that's achieved, it will show us its hand for the next objective. Okay, let me check the trading view of a thing I wanted to show you. Oh, the thing is not UVP USD pressed. Okay, sorry, because of my network. The MTN network is nonsense, and the Glo network is ridiculously slow. Okay, so I'll show you what I just wanted to show you. Sometimes when you open it, it will just show as if the candle is rubbish. You see this place where you have numbers, so just drag that place up or down. You notice that you can be able to adjust easily. The reason why I didn't use this trading view for the explanation of the CBDR is when you are using phone to draw the rectangle, it's a whole lot of work. So that's the thing. So practice that. If you have questions, normally let me know. Enjoy.